What's going on, everyone? It's Caddy with Money Vesting. So I hope you all are having a great start to the morning. Max, good morning. Cyril, good morning as well. Welcome on board. We'll do the live stream for about an hour, maybe an hour 15. Dave, welcome. Jode, AMC, you're right. AMC, I was just looking at it this morning. My alert went off. It's up over 9.7%. The squeeze is finally happening for all of you guys. I'm rooting for this to break out $20. I think the all-time high for AMC as well were $33, or I think it was $36, the all-time high. But nonetheless, we are pushing higher. And first time I joined from the start, Dave, welcome. That's awesome. Good morning, Goldie, Merlin, welcome. What's up, Neo? Thank you so much for joining in. So yeah, market's looking decent, I should say. A lot of stocks are actually green by reasonable amounts, except for AMC and GME that are like up over 9% and 11%, of course, falling through with that squeeze, and really pushing over. So AMC is almost at $18, up over 9%, and GME up over 11.5% to $233. Once again, I think we're seeing a bigger move in AMC than we are seeing in GameStop at the moment, because for GameStop, $483 is kind of like the all-time high, I should say, or at least a 52-week high. And Rita, good morning. I was just about to send a link over to our Discord. It's just difficult because I can't really find the link on this backend stuff, because it's always a different type of link. And every time I post it, it shows offline. But welcome on board. Thank you so much for joining. India is considering to legalize Bitcoin. Max, that's great news. I haven't heard about that, but I'll definitely be looking into that in more detail for sure, because that would be incredible. I kept checking this morning, so that's good. That's great. But yeah, we'll also go over Bitcoin in just a second. But GameStop, $483 is like the 52-week high, and right now we're at $233. So we're almost at like 50% of our way there. But when you look at AMC, we're seeing a bigger squeeze, so to speak, or bigger move, I should say, for AMC, because we're almost at $18. And when this squeeze happened, you know, we hit a high of, what is it, $20? So $20.36 is the 52-week high for AMC. But we've got Microvision that's up over 3.7%. We've got Coinbase right now at 246. It has moved up. You know, we've covered this stock over the weekend as a potential buy, but you know, anything under 225, I want to say 230, is a potential buying opportunity for the stock. It's come down substantially from its all-time highs, you know, from its IPO price as well. And well, DPO, which is a direct public offering, and you know, they're already insiders were basically selling to the actual public to have access to the company as a public shares. But that being said, you know, a lot of potential for Coinbase in the future. So definitely something that you may want to consider while we're still off the highs by a lot. So, all right, Prasad, welcome. Good evening, good morning, wherever you guys are watching from. So thank you so much for joining in. Start already. So it looks like it's going to break out. Mohammed, what is plug? All right, yeah, we'll go over plug power as well. We'll just look into that in just a second. I'm just listening in on Bloomberg as well to see if there's anything that's coming across as interesting. But Tattooed Chef, 1.6% on the day, pre-market so far. We've got Square that's up over 1.6, breaking out over 215. This is also forming in Head and Shoulders, and so is AMD. So those are two stocks we want to be very mindful of. Carnival Cruise Lines up over 1.26%, trading back up to almost $29. We got Baidu that's up over 1%, trading under $200. Baidu's also been quite a bit of a sell-off here recently after the Archegos event. Vroom's up over 30 basis points, and then everything else is kind of flat on the day, including Big Tech that is somewhat up, kind of like 0.5% or just about 30-40 basis points. Li Auto earnings, yes. So they were actually going to be reporting today pre-market. Let me see if I can pull that up. All right, so here's going to be a quick read on Li Auto's earnings. So actually, thanks for reminding me, Merlin. So Li Auto earlier reported Q1 EPS of 6 cents, misses 2 cents estimate. Sales 545 million, beat 522 million estimate. So revenue beat, bottom line miss, and reported quarterly. So this is a very two-liner article. Let me see if I can find something else. But Li Auto is, what is it? So it's pretty much flat. It's just trading exactly at $20 pre-market, right? So we'll see if I can actually find some more information here. All right, so we have some more information here. So deliveries for the company. So despite Q1 earnings beat, Li Auto is down 40 basis points, so pretty much flat, trading at $20. The company sees Q2 revenues between $609 to $651 million versus consensus of $663, representing a 104% to 119% increase year over year. So they actually came in a little bit on the lower end when it comes to the consensus estimate for the second quarter revenue guidance. And when you look at the Q2 deliveries, vehicles expected to be between 14,500 and 15,500. That's actually a good guidance, so to speak. I mean, NIO is doing, 20,000, somewhere in between 20,000. They also are going to be increasing their production capacity to 20,000 now per month. For NIO, 20,000 is what they did in the first quarter, but they are also expanding their capacity to 20,000 per month moving forward with the renewal of their manufacturing agreement with Jack. But for Li Auto, 14,500 to 15,500, 119%, 134% year-over-year growth. Vehicle sales up 311% to 528 million. So vehicle margin was 16.9% versus 8.4%. So almost a double expansion in the vehicle margin. So that's actually really good. We already knew what the vehicle deliveries looked like, but revenues also jumped over 300%. Gross margins rate improved 930 basis points year over year to 17.3%. That's really good as well. So gross margins also expanding. In April 2021, the company delivered 5,539 Li Ones, representing a 111.3% increase year over year. We actually broke down a specific video over the weekend about Li Auto, right? We broke it down for Li Auto and Nvidia, which is also reporting the earnings later today after the markets close. But I think Li Auto is also announcing a newer vehicle. I think it's going to be a newer version, which people can buy for their older version, and they're also offering some type of a rebate program for close to $1,550. And for Li Auto, they're also, I think the vehicle cost is going to be $11,000 more than their previous vehicle. So analyst Daniel Ives and team forecast the EV market representing $5 trillion total addressable market over the next decade, with many EVs and OEM supply chain players poised to be major winners. So Daniel Ives, we've had him on the channel. We interviewed him for, I think it was like back in March, and he's bullish on Tesla with a price tag of over $1,000 per share. He's bullish on Apple, price tag of well over 175 as a base case, and I think 225 as a bull case target. And he's also talked about NIO, other XPeng, Li Auto, other manufacturers in the electric vehicle space. But I think all in all, it was a strong report, strong revenue guidance, coming off a little bit on the lower end. And revenue beat, bottom line EPS was slightly missed, so we'll have to kind of drill down on the income statement to really understand, what they were spending money on. But nonetheless, I think they're seeing strong delivery guidance, 14,500 to 15,000 vehicles in the second quarter. But other than that, I think it was a strong report for Li Auto, and we're pretty much flat, trading just at $20 per share. Amazon, yes, Jason, they also closed through the deal. I think it was at $8 billion for Amazon with MGM, and we're up a little bit over 0.5%, 32.75. This is a stock that's still very, very undervalued. So Amazon agrees to buy MGM Studio for $8.45 billion. So just a little bit under $9 billion is what they basically paid, which I think is fair. So Amazon agrees to buy MGM Film Studio for $8.45 billion. Bet that nearly century-old Hollywood icon can feed an insatiable demand for streaming content. The takeover is Amazon's biggest acquisition since it's agreed to buy Whole Foods, which I also remember they bought Whole Foods like back in 2017. That was a pretty big acquisition for them as well, for $13.7 billion, but follows investments of about $11 billion on content for its streaming video and music services last year alone. So the real financial value behind this deal is a treasure trove of IP in the deep catalog that we plan to reimagine and develop together with MGM's talented team. And of course, with the combination of Prime Video and Amazon Studios in a statement, it's very exciting and provides so many opportunities for high quality storytelling. So all in all, very, very excited about this acquisition. And we're up a little bit, close to 0.5%. This is a stock that I have a price target of well over $4,000 over the long term. It's not a question of if, it's a question of when we get there, in my strong opinion, and potentially it's going to take some time, but we have to be patient in this market. I was just analyzing the stock yesterday, and it's been kind of flatlined. We haven't moved much from June and July of last year, so it's been almost 1 year since Amazon stock has pretty much traded in that range. It's offered some great swing trading opportunities, but for the most part, it hasn't moved much in a 1 year period, almost a 1 year period. All right, so let's take a look at the broader markets here. The NASDAQ is up 26 basis points pre-market as of the time of this video. And we've got the S&P that's up 20 basis points. We're seeing the third potential straight green day for the NASDAQ 100. So I don't want to say that we're seeing a complete rotation because nothing is confirmed just yet. Because the yields are down, right? That could be one of the reasons why we're seeing this as acting as a catalyst, because the 10-year yields have been pulling back. So US 10Y, we're down 20 basis points from the highs, so 1.56 was the all-time high. Let me actually pull up the yields here. So this right here is going to be the yields daily chart, and again, we have come down substantially. I mean, yesterday we were down over 2.75% for the 10-year yields, and we've come down from 1.775 to trading as low as 1.566. But there's still a possibility that the yields break out over this resistance at 1.775 to potentially reach as high as of 2%, right? That's gonna again be on a longer term dated stocks such as growth stocks, which their valuations are based on much further out cash flows. When we discount them using the discounted cash flows, is going to be affected, and that's why we see a little bit of a sell-off in growth and tech and high multiple names when the longer term yields push up higher. But nonetheless, we are still up 26 basis points, and this right here is going to be some of the stocks. So Apple up over 28 basis points, Tesla is up over 0.5%, trading back over 607, and NEO is also up over 80 basis points. Let's take a look at Palantir. We're up just over 0.5%. So Palantir, we talked about how 22.50-ish level, that's the level to watch. Yesterday we got tapped out at $22.11. Good morning, good morning. Amazon needs to announce a stock split to skyrocket. I agree. Couldn't agree more. I mean, if Amazon announces a stock split, there's just going to be a lot of excitement about Amazon, right? People are going to be more excited about investing in this stock, even though fundamentally nothing really changes. I mean, the valuation theoretically, like on paper, needs to be the same. You're just increasing the share supply. You're reducing the actual price of the share depending on the split ratio. But nonetheless, I mean, that's going to bring a lot of retail sort of interest in the stock, as well as we have already seen with Apple, Amazon, Apple and Tesla, excuse me. And then if you look at Nvidia, which also broke out the following day, the previous day, yesterday, up over 23 basis points, and today we're also up close to 0.5% in anticipation of the earnings. I'd be very careful with Nvidia today, by the way. So $650, maybe we get a retest of that prior to the earnings, after hours, but then most likely, since we have moved up quite a bit, would not be surprised if we do see kind of like a rolling over pattern or some type of a sell-off for Nvidia. So coming in from lows of 540 on May 14th, we are up a little bit over 17% for Nvidia. So I'd be very careful with this one, kind of like buying the rumors, selling the news type situation, as we've already seen with a lot of big tech companies, that regardless of how the earnings are, they can come out with the picture perfect best earnings and the stock continues to sell off. All right, so let's take a look at Plug Power and some of the other stocks. Quick update on cryptos. We got Bitcoin that's up over 2.6%, just trading shy of 40,000. We've got Ethereum that's up a little bit over 2%, back over 2,700. And we've got Dogecoin that's also up pretty much flat on the day, just trading shy of 35 cents. And Mara is up a little bit over 4.3%, trading back over 2360. And Riot is up over 5%, trading over $26.45. Very similar patterns for Riot and Mara as well, because they are trading off of Bitcoin's price, and as Bitcoin continues to form some consolidation patterns and trade sideways, that's why we're seeing a bit of a pullback for those stocks as well. All right, let's take a look at Plug Power. Is it breaking out? What's going on? So we're up over 1.2%, and Paul, good morning from Canada. Happy to have you on board. Adam, what's up? Thanks for joining in. But yeah, so Plug Power, this is the resistance, a very important resistance at $30, right? That's the level that we talked about in our previous videos. So that could result in a successful trend reversal if you can get a breakout over this resistance for Plug Power, right? $30 is going to be the level, and we are perfectly sitting above our 21 EMA. So that's the first sign of a trend reversal for Plug Power, right? We had become incredibly oversold, so we are coming from those lows. So they're also reporting earnings on the 26th, which is today. So, or actually, it is today. So they are reporting their earnings today. Let me see. All right. Receives expected notice from the NASDAQ. So Plug Power receives NASDAQ notice over failure to file quarterly report, plans to file by June 14th. So Plug Power said it has received a notice from the NASDAQ informing the company that it is out of compliance with the exchange's reporting requirements by failing to file a Form 10-Q for the quarter ended March 31st in a timely manner. That's interesting. That's the first time I've actually read that catalyst. Plug said that the notice will not have an immediate impact on the listing of its shares on the NASDAQ or trading of its stock, but the company said it intends to file the report by June 14th. If it is unable to do so, it plans to submit a plan on or before the date, stating how it intends to regain compliance. That's very interesting. I've never seen a company actually miss reporting their own earnings. But nonetheless, I don't know if we're going to actually see the earnings being reported. But again, that $30 is going to be the resistance to watch for the NASDAQ, for the Plug Power stock. And let's take a look at NNDM. So that's going to be Nano Dimensions. And this right here is the complete breakdown, right? So we are literally at a breaking point. We're like almost testing for NNDM whether we see a breakout over this lower high and the 21 EMA. Like you can almost tell that we're just getting a rejection here. So we got about a 1 minute left for the markets to open. Quickly going to break down NNDM, and then we'll switch over to the NASDAQ and the S&P 500. Claudia, good morning, good evening from Switzerland. Thanks for joining in. I'll take a look at XL as well, Mohammed. And Penguin Dave, thank you so much for good morning. Thanks for joining. But for NNDM, keep a close eye at this 665 resistance. It's also aligned with these lower highs to watch. So a successful breakout is going to potentially put us over that 21 EMA like we did with Plug Power. And then the next resistance to watch is going to be the 758 level. That's going to be the 50 EMA. So do you think NVIDIA will drop or rise before or after the stock split? I think there's more room for NVIDIA to have some more upside prior to the stock split. I just think that after the earnings today, we could see some more downside because NVIDIA is up a little bit over 17% from like I think it was like May 14, so like a couple weeks ago. So it's definitely been a strong move. So you want to be mindful of that $650 resistance for NVIDIA. And then prior to the stock split, I could see some more upwards momentum for NVIDIA as well, because there's going to be a lot more excitement for that stock split. And I think June 19th or June 21st is kind of like the cutoff date, and then July 19th is when they are going to be dispersing those 3 additional shares for every 1 share held. All right, so the markets are open. The NASDAQ is up over 20 basis points now at $333, the QQQ ETF, and SPY is pulling back a little bit. Let's listen on this very, very closely.
1% on that currency pair. Elsewhere in crude, we are negative 0.8% at 65.54 on WTI. That's the Wednesday morning price action. Let's peel back the session just a little bit in the early part. Here's Abby.
John, it seems that tech investors have just a little bit of faith because we're now on pace for our 3rd up day in a row. That's the first time we've seen that in more than a month for the NASDAQ 100. So helping out those gains, the likes of Apple and Amazon. And of course, Amazon has announced that deal to buy MGM Studios for $8.45 billion. But we also see that the reopening trade, the travel trade, is working as well, and optimism that folks are going to be getting back out there in the world in a big way. So Royal Caribbean and American Airlines are higher. Relative to retail and another part of the reopening trade, a mixed bag, but more to the green. Nordstrom down 8%. They posted a much wider loss than expected, so the stock getting punished. Urban Outfitters, on the other hand, absolutely soaring. They posted a huge top and bottom line beat. And Dick's Sporting Goods also posted a huge top and bottom line beat. They put up $3.79 on the bottom line, beating by 228% on $2.91 billion. That's a 31% beat. That's a big way of saying that they really put up a massive beat. And then finally, we once again would be remiss if we did not take a look at the crypto space. So take a look at Bitcoin and Ethereum, both soaring after yesterday's mild drop. And then Riot Blockchain and Marathon Digital Holdings up in line with the crypto space and the gains that we're seeing for those cryptocurrencies, John.
Abby, thank you. In the early part of the session, then about 2 minutes in, we are positive by 0.2% on the S&P 500. Materials, bottom of the pile, negative about 0.1%.
I didn't even realize that this monitor was up the entire time. So hopefully you guys did get the chance to kind of get the. Hopefully it wasn't covering the entire screen. But NNDM, so Rita, let's take a look. So yeah, so we are the 21 EMA is the rejection or the resistance, so to speak. We're like right there. I mean, 657 is where we're trading, and 665, I should say, 664 is the 21 EMA. So that is the resistance level. So if you get a successful breakout on heavy volume from here, then we could push up higher even further. Shift Technologies is taking a beating. It's down about 1%. It's up over 1% almost, but wow, this is a pretty big sell-off here, over 11.5%, coming down to 670. This is a stock that may not be all right. So Marathon's giving that alert over 24, 22. So, but we'll cover Marathon in just a second. But this right here is a strong support for Shift at 650s. The RSI and the MACD like almost very oversold here. So this may actually not be bad. I just have to do some more fundamental analysis on this to really understand what the valuation looks like. But year to date, we're down 19%, and to get a better understanding of the revenue projections and what the growth looks like for the company, we're trading at 2 times sales, almost 3 times sales. So I'll do some more research on this because it definitely seems very, very oversold, and we are down substantially. Like from looks like a lot of volume kicked in around June 2020, so from like a 1-year low. This is very cheap prices, so thanks for bringing that up. I'll kind of create some alerts on this stock, and definitely will be doing some more research to get a good understanding on that. All right, so this right here, QQQ, up 26 basis points. SPY is up a little bit over 20 basis points. Let's take a look at some of those stocks. So Tesla is up 23 basis points, trading as high as 606. And then NEO is up over 75. So we're getting a little bit of a mixed day and flat day, so to speak. But Marathon Capital with a huge rally, up over 6%, and so is Ride up over 7% each. Let's listen on this very closely here.
You see over those different periods. Over the last couple months, you've seen this reflation story come through, where anything that benefits from rising growth, reopening, and inflation has done very well at the expense of the secular growth names. But over the past couple of weeks, where we've also been flat, the rotation's really been one of a more defensive one. And I think that speaks to sort of this idea that this is as good as it gets. I don't think it's as good as it gets. I think that things are going to continue to improve, and there's a big runway for recovery. So I think that reflation reopening story is still intact.
We'll come to that runway in just a second. Tony, just a line of yours that pops off the page for me. Positioning for an economic recovery while seeking to protect capital from potential bouts of volatility. Is that what you're looking for deeper into the summer, Tony?
I do expect bouts of volatility. Look, I think we are in store for a very massive recovery for a variety of reasons, whether it's pent-up demand, whether it's fiscal and monetary policy, which is quite stimulative, the vaccine themselves, and the fact that consumers are in really great shape, unlike most recoveries from recessions where consumers are licking their wounds, they're repairing their balance sheets. Think about how underwater they were on their homes back at the end of global financial crisis. Compare that to today. So I do see a big economic boom, but it's not without risks. Risks about inflation, and there will be this debate about, we will see higher reported inflation, and then the question will be, is it transitory or is it something more durable? And I think the market will have real questions about that and will worry about that, and that in and of itself will create bouts of volatility in the market.
So, Tony, you're talking about this barbell approach, balance. Is that key?
I do think it's key. And I'll take two sectors, tech on one hand and financials on the other. Tech, I think, has great long-term fundamentals, good growth, good business models. And in fact, they've become a lot more staple-like. And we've talked about that before. I think of tech as the new staples. They're so integral, so mission-critical to both enterprises and individual consumers that you just don't stop spending in a recession. And we saw that in spades last year. So I think that's a good long-term investment. Now, there are some areas of that sector where the valuations are high. And I think that can be a problem, particularly in a time of rising inflation and a time of rising rates. But there's the balance of banks and financials, for example, where they are one of the few sectors that would actually benefit from rising inflation and rising rates, and yet their valuations are still very discounted. I mean, we're buying banks at 12, 13 times earnings versus a market at about 22 times earnings. That's a really big discount, and it's one of the cheapest ways to hedge inflation risk that I can find.
Dan Suzuki, build on that for us. The barbell approach over at BlackRock, a bit more balanced. Why you might suggest more of a cyclical tilt.
So that's interesting. Well, there's a couple things that we definitely want to consider, like starting September, right? September is going to be when the unemployment expires. And starting September, we're also potentially going to find more and more sort of schools reopen back up, whether it be colleges, whether it be high schools in the United States. And one of the biggest reasons why there's been a supply shortage of labor, like where there's a lot of companies fighting to basically hire more people and they can't, and they're actually raising wages and salaries, is because people are staying home to take care of their kids who are not going to schools. So when that actually changes, we could see the labor market improve drastically, right? And right now the unemployment rate's still sitting at 6.1%. Depending on how you look at it, 6.1% is still relatively higher than where we were, before the pandemic at below 4%. And it's kind of like the highs of the 2001, 2002, like after the dot-com bubble burst. So it's crazy how every time we get into like this recessionary times, when we see like a economic contraction, our previous peaks become our new support levels for some of that economic data that we find out, whether it be unemployment, whether it be inflation, whatever the case may be. It's crazy that we're getting into more and more severe pullbacks. Tom, thank you so much for that. I really, really appreciate you. And NEO is now up over 1.39%. Tesla is going in the opposite direction a little bit, down up 10 basis points, so pretty much flat, trading at 605. And then we've got Nvidia up over 36 basis points. Palantir seeing a bit of a pull higher here, 1.4% on the open. And let's take a look at the market. So QQQ's flat, consolidating sideways, and SPY's also pulling back slightly. Prasad, that's all right, check out NNDM resistance at $7. Very quickly, we're gonna go over that. So 755 is kind of like what I have it. So we're seeing that breakout. Wow, that happened very, very quickly for NNDM. So we were just consolidating, and then up over 5% all of a sudden. So if you go over the 5-minute chart, there we go. So we had a lot of volume kick in for NNDM, and we're seeing that potential breakout over 650 that we talked about, right? Just a few minutes ago. I think it was 667, 665, like those levels. So we're seeing that breakout over here for Nano Dimensions, and the next resistance to watch at 755, because we had a false breakout from that level here. We had a false breakout over here. So a couple of times we failed to successfully break out over that 50 exponential moving average. So, that's going to be the level to watch at close to 755, the next resistance, in my opinion. Crypto may have a red day. Let's take a look. So QQQ is now starting to curl back up higher, up over 33 basis points. Tesla is reversing a little bit. And let's go over these charts. So we can go over to cryptos. So yeah, I mean, we're seeing a bit of a pullback here. So Bitcoin is up over 2% still. And we have Mara and Riot that are pulling back a little bit from the highs. We were up over 7%, and right now we are up over 5% each. And Ethereum, Bitcoin, Doge. Doge is actually red now, down about 24 basis points. But Bitcoin just shy of $40,000. So crazy on NDM. Does it have to stay above that breakout on the hourly close to confirm it? I think it has to just break out over on the daily, close the candle. That's why we can see a confirmed breakout on heavy volume. So two things that I would watch for NNDM is a successful breakout on the day, if it closes above 667, and then heavy volume as well. If it's going to be higher than the average 10-day volume, that's going to confirm that breakout for the stock. And then we can potentially see a continuation or a follow through up to 750, 755 moving forward. But we're kind of having a mixed day, right? Back and forth. There's not much going on from an economic standpoint. Today we have the GDP numbers coming out. The second estimate comes out tomorrow, Thursday, and the jobless claims numbers also come out tomorrow. Those are going to be two big tells to watch. And in June, we've already discussed how that is going to be the most important month, I feel like, in a long time. We're going to get the inflation data, we're going to get the unemployment, we're going to get the FOMC meeting data also come out as well. So gold is up a little bit, and Coinbase is also up. Let's take a look at Coinbase very quickly. One thing I do want to point out for NEO very quickly while we're at this topic is the NEO had some type of a death cross pattern. Now I know it can sound really scary, but that simply means that the 50 EMA, or the 50 simple moving average in this case, that's going to be this yellow line you guys see on the chart. So if I go over here, you'll notice that I have one set at 50, the other set at 200, another one set at 100. So in this case, what we're seeing is the 50 simple moving average crossing below the 200 simple moving average. So it's a shorter time frame moving average crossing below the longer one. And in a nutshell, that's not good for a stock. From a technical standpoint, it could represent some more weakness. So mentally, I'm prepared for NEO to retest lows of 34, maybe even lows of $30. It doesn't have to happen, but I am prepared for it. It is 7 p.m. and yes, it's a little bit past 7 p.m. in India. All right, let's take a look at SPRT for Atom very quickly. So support.com, I haven't really looked into this stock at all. So it provides customer and technical support solutions delivered by home-based employees, and it provides cloud-based technology platforms to companies in multiple industry verticals. That's interesting. I haven't really looked into the fundamentals all that much, so very quick analysis on it. Income statement, we've got annual revenues actually going back and forth. So that we did increase to almost 70 million, came back down to 43 million, probably getting affected by COVID here. But quarter over quarter, we're seeing a bit of a recovery to, quarter over quarter, it's pretty much flat. So not really seeing much there. They're generating a net loss, although they did generate net income back in 2020. So statistics 1.25 times sales. There's no PE ratio here. So let's take a look at the balance sheet very quickly. So we're going to go over to cash and the amount of total debt. So total debt pretty much non-existent. Cash sitting at 39 million. So that's reasonable. And we're coming down from peaks of $9. That's a steep sell-off of over 72%. If you look at the history of the chart, we've come down substantially. I mean, I'll definitely have to do some more research fundamentally on this stock, but on the weeklies, we're sitting perfectly on the 50 EMA here. The support, for this, I would definitely be watching it close to like 250. Previous resistance. Right now, we're testing that support, coming down to a more neutral range. On the daily, we're even oversold at close to 38. So, we are starting to consolidate a little bit. So we're not making lower lows anymore. That doesn't mean we can't go any lower, just that we're not doing that yet, right? So we're seeing kind of like these lower highs being formed and validated support at around $2.50. So that's the level that I would watch for this, and then a breakout over the moving averages at $3 is potentially going to change that trend reversal. But again, a breakdown below this is also something that you want to be mindful of, because I haven't looked into this company fundamentally. So 250 support, and right now we're forming some type of a lower highs. So QQQ is pulling back. What is happening? Rita, thank you so much. I really appreciate you as well. And thanks for. I hope that information was important. And again, thanks for watching. Waiting on the good cop. Thank you so much. And make sure that you guys hit the like button. I always forget. So we've got 200 people watching, 49 likes. So let's see if we can get to at least 100 likes on the live stream. SPY really pulling back here on the day, seeing a bit of a pullback up over only 2 basis points, and QQQs is also up over 11. Let's take a look at the NASDAQ here on the dailies. IXIC, we are still about 13,006. So actually, let me dim that. So we're gonna move that up a little bit here. Actually, let me go ahead and delete that altogether. So yeah, we definitely saw a breakout over 13.6. We validated 13.6 yesterday, so low for the day was 13,631. Trading above the moving averages, and right now we're seeing a bit of a pullback. This is very similar to what the pattern looks like here. A lot of consolidation, we're just going back and forth. Very similar to the pattern that it looked over here as well, right? So just consolidating sideways. I mean, we were range bound from May 2019 until October 2019. So that was like a 4-month period. May, May, June, July, August, September, October, so like 5 to 6 month period where we're just trading sideways. We're not going anywhere. Until after we just started trading upward channel, higher highs, higher lows, saw the COVID crash. Very similar uptrending channel. We push up, consolidated sideways, and now we're seeing resumption of that uptrending channel and just another consolidation phase where we are just trading sideways for the Nasdaq. So 13.6 is going to be the level to watch. Kate, thank you so much for joining. GME is actually surging. Let's take a look here very quickly. So up over 10%. That's not bad. But like I said, AMC I think is having a much bigger move compared relative to GameStop, only because AMC is back up to almost $20. It's a pretty significant move here, up over 8%. Trading is at 18.45. And this right here was a short squeeze infused push to highs of $20.36. Soares, good morning. We'll go over Coinbase and DraftKings in just a second. But AMC definitely having quite a bit of a move here. I think the all-time highs sit well over $36 for this stock. So you'll notice that I was actually looking at the monthly chart here today for AMC, and this is the double top resistance at 35 that we kind of validated in 2015 and 2017. Both times we tested those levels, and then this right here was the entire sell-off after we had the pandemic. Consolidated here at close to $2, and now we're back up to that. So Li Auto's up over 5%. That's great. That's great news. Yeah, we broke down the earnings earlier for Li Auto, and I think they were strong earnings. They did beat revenue guidance, revenue estimate, so to speak, but they missed on EPS bottom line, and they also came on the lower end for the future guidance. So $21 is the resistance right here at close to Li Auto. We're trading exactly at that level at $21. But 21.10 is going to be the level to watch, and we're also forming this lower high and lower low pattern. So you'll notice that we're just consistently, trending down, and successful breakout over 21, breakout over this lower high. So it's going to be this red line you guys see on the chart is going to bode well for the stock for us to see a successful trend reversal in the future. All right, let's take a look at DraftKings here, DKNG. I think it's going to be on a different chart. By the way, this is an interesting chart that I created, for inflation. That covers inflation, it covers the interest rates, and it covers the unemployment rate. And unemployment rate going back like 1950s. It goes over all different previous recessions and crises. I also wrote this down in a different video where we cover the macros, but we'll kind of discuss this in more detail because this is going to be the topic of 2021, what inflation is going to look like, and where we can see spending and interest rates and tapering from the Fed. I'm just listening in on Bloomberg very quickly. Let me see if I can bring that up, because we have somebody from Blackrock basically talking about the fundamentals of equities.
They really passed with flying colors, and I think we're now at a point where they're going to start increasing their buybacks, increasing their dividends post the June CCAR DFAST process. So I actually think we're in good shape, and I think the regulatory issues going forward are a lot smaller and less financially relevant than the regulatory issues over the last decade.
Dan Suzuki, do you think they would have passed with flying colors without the unprecedented fiscal assistance this economy had over the last 12 months?
Yeah, I mean, I pretty much agree with what Tony said. Again, I do think that they would have passed maybe with less flying colors, given they just would have had more credit losses on their books. But I think they would have persevered very, very well, given how well capitalized they are. I think that, I also agree with Tony that, I'm not looking to see a lot come out of this. I think it's going to be more of a, grandstanding.
Theater. It's always theater, Dan.
It's less on profits and more on social issues. But one thing I'll say though on the regulatory front is that what they need to understand is what's happened over the past decade post financial crisis is that by putting extra regulations on the financial sector, and Jamie Dimon wrote about this in his letter, it's created competitive advantage for the non-bank financials. And by doing so, you're actually moving a lot of the risk outside of the banks where they're actually well monitored and regulated. And that could ultimately, cause some increased risk down the line.
Dan Suzuki.
Sorry to cut you off.
Got to leave it there, Dan. Always good to catch you up. I think I cut you off. Don't worry about it. Dan Suzuki and Tony DeSpirito. Tony from Blackrock. Thank you, gents. Appreciate it. Let's get you some sector price action. Your equity market is doing okay. No big moves this morning. With your stock movers, your sector price action, here's our stocks editor, Dave Wilson.
Thanks.
So All right, we've got Nvidia already falling off prior to the earnings. We got Palantir almost testing $22 once again, so we're literally just shy of $21.98. NEO is pushing higher, up over 1%, and Tesla is kind of consolidating on the day, pulling back. So a lot of people asking me to look at Palantir. Let's take a look. So Palantir, this right here is the complete technical breakdown, and the real test comes in at 22.30, you guys. That's the level that if you can get a breakout over, then it's gonna be potentially a trend reversal. We're already almost testing our 50 EMA, so that's the 50 EMA, and it's so clear that once tested on April 13th, rejection. Second time, rejection. Sold off all the way down here. This is the third time that Palantir is actually retesting its resistance at the 20 or the 50 EMA close to 22.30 levels. So that's the level to watch, and right now we're trading at 1/10 of the volume, close to 6.1 million shares. So we are 10% of the way there in 23 minutes into the open. So we want much higher volume than 62 million. That's the average 10-day volume for us to see a successful breakout over this level. So I would still be watching 22.36, 22.35, around those levels on the day for Palantir to see if we can get a successful breakout. And then this right here is going to be the next resistance potentially. We may find something here at 24.37, previous resistance here, but I think a much stronger one is going to be right there at close to 25.50 levels. So that right there is going to be the resistance there. QQQ's seeing a bit of a pullback. S&P a little bit more of an aggressive pullback, up only 2 basis points, so pretty much flat on the day. And all right, forgot what we were doing. Let's take a look at XL Fleet very quickly for Mohammed. So daily chart, I mean, since its IPO, this was assuming it came on board back in like March 2020. We had a huge run up to highs of, what is it, 34, 35, and down to $6. That's a substantial decline there, a little bit over 81%. But nonetheless, one thing I can point out very quickly is that we are forming a bullish divergence, or a positive divergence, so to speak, for XL Fleet. And this has been coming along since, I should say, April 1st. So even though we are forming these lower lows where we just continue to go down even further, you know, we're coming down lower than we did the previous time. So this obviously is lower lows. But at the same time, if you look at the relative strength, we're actually making these higher lows. So a bullish trend reversal may be on the horizon for XL Fleet. I know this has been very painful depending on where you've been holding on to, like where you've been buying, but a potential trend reversal could be on the horizon for this. So the first resistance we need to see a breakout for XL Fleet is going to be this 750 level right there, because that right there is the previous resistance. We're already hovering around the 21 EMA, and a breakout over that level is going to put us into some higher highs and higher lows pattern, because this is the previous high. If we get a breakout over that, we could potentially see some higher highs and higher lows for this stock. But I haven't done fundamental analysis on this. I've actually added this to my EV watch list to keep a close eye on this, because it's very, very discounted levels for an electric vehicle company that is focusing on commercial and municipal fleets, which is very interesting. It's a different market that I haven't looked into. I don't think anybody's tapping into. I think highly on maybe the commercial, like bigger truck market, but this is definitely going to be on my watch list now. I'll do some more research. Two companies that I'm going to be researching after today is going to be XL Fleet and Shift Technologies. All right, so let's take a look at DraftKings. So Palantir back over $22, up over 2.5, almost 2.5%. That's going to be good. Look at Li Auto. We already did, Oliver. More than welcome to kind of go back on the live stream and check out the analysis on Li Auto. We also broke down the earnings and how well they did, and you know, it's up I think over 5% the last time I checked. But so I just want to make sure what alerts are going off. So Shift triggered right now at 7. All right, so this is an earlier one. Yeah, 2 minutes ago Shift Technologies triggered. So let me actually see where it's trading now. So we're pushing higher for Shift. We're up over 3%. So definitely, you know, this is going to be a stock that's going to be on my watch list. It's very oversold at the moment on the daily and the 4-hour chart. So there could be opportunity here. But again, I'll be doing some fundamental analysis on this. NEO pushing higher, up almost 2%. Yesterday it was kind of like a strange day for Neo. We were up like almost 5%, and then we kind of rolled over. And today we're kind of flat open, and we're pushing higher once again. So, and look at Nvidia, completely opposite to Palantir and Neo. You know, it's again one of those things where you just run up prior to the earnings. This has been so the trend of earnings. This has happened every single time. If you look at Netflix, you look at Amazon, you look at Apple, you look at big tech, they've always run up prior to the earnings, and they've always sold off after the earnings or a day before that. But still, I mean, after the earnings, I could see like a spike after hours, and then some see profit taking and kind of rolling over of the pattern. ARK bought more DraftKings yesterday, so let me see if I can take a look. So Twilio on the move, breaking out over 320, up over 3%. $340 is going to be the level to watch next as a resistance. We also covered this stock over the weekend as a potential buy after we broke down below the head and shoulders pattern for Twilio. Long term, strong prospects. It's just that right now you're still paying a little bit of a premium, in my opinion, just based on the valuation. But if you have a longer term time horizon, this is a stock that you may want to look into, along with the CrowdStrike and Palantir, of course. Let me just go over DraftKings very quickly, and then we'll go over Square. So DraftKings also had a head and shoulders pattern breakdown below the neckline, below $55, and came all the way down to $40. Previous support here, back tested that level, and right now we're seeing definitely a push higher, almost 2%. The RSI, the MACD, most certainly look very, very bullish as well, I should say. So RSI pointing upwards, coming from an oversold level, and the MACD also pushing higher. So this right here is the next resistance, I should say, for DraftKings at close to 53.45, 53.50, aligned with that 50 exponential moving average. And then we'll kind of worry also about the resistance at $58. 58 is going to be the neckline. Previous support could be the next resistance to watch. But in my opinion, we could see a continuation beyond 50, maybe up to $52, $53 per share. And then the RSI and the MACD potentially will get a little bit on the overbought side, and then we could see some pullbacks or a correction for DraftKings. So let's take a look at Neo getting volume. Adam says, so let's see. So Neo's volume is at 8 million. So we're a little bit higher than compared with Palantir. So yeah, a little bit higher, although even though the average 10-day volumes for both stocks is almost identical, at almost 71 million to 63 million. But Neo, more shares are being created right now. Tesla still hovering at around 600, staying above 604, pretty much flat on the day. SPY just turned negative, and QQQs are also up over 12 basis points. All right, let's take a look at Mark. Welcome on board. Palantir we covered, I think, multiple times over the live stream. You're more than welcome to watch, kind of like go back and circle back to those. But let's take a look at SPCE, Virgin Galactic. Up over 6%. There we go. So seeing a little bit of a trend reversal. They also announced their third successful test flight, I think a couple days ago, when we saw this huge gap up day, and it was up over 27.6%. And excuse me, so 6% up. So we're now trading above the 50 EMA. This could be a start of a potential trend reversal for Virgin Galactic after the significant sell-off that we have seen. I would just be mindful of the RSI and the MACD as we're getting a little bit on the overbought side. So the RSI is just trading at 64, and the MACD has also been aggressively pushing higher right after the crossover that we saw. So that right there at 50 EMA support for Virgin Galactic at close to 24.45, 50 EMA here. And the next resistance actually is going to be the level that we're sitting at close to 27.30, 27.35. And this is coming in from July 22nd, 2020. So almost about a year ago, we were testing this level, then we sold off. And then we actually had another test. We broke out over that level, broke down even further, and then gapped up to break out even further. So, and that actually level was acting as a previous back-tested support right here. So previous resistance, back-tested support, and that right there is going to be the level close to 27.35 for Virgin Galactic. So RSI, MACD, be mindful of that. Resistance here, we have seen quite a bit of a push higher from lows of $14. I think it's almost 100%, 87%, almost 88% for Virgin Galactic. Do you think SPCE is undervalued right now? this is a difficult one because they have almost no revenues. So they're trading at almost 7 billion market cap. So it's hard for me to put a valuation on this company just yet, only because they're more of a concept right now, even though it's a great concept, but revenues need to actually be there for me to actually value the company, to actually understand what the future cash flows and revenues look like. Same thing with Nikola. I think they had a very, very low revenue quarter over the past few quarters, and that's why it's so difficult and challenging for us to really understand what the valuation, appropriate fair valuation is based on future growth multiples, price to sales, price to earnings. So if you look at the here, let me actually pull up the financials. So statistics. So there you go. So they have no P ratio, no price to sales, no price to cash flow. They have a book ratio, which is going to be literally based on the book value of the company, which is based on the balance sheet, assets and liabilities, so on and so forth. But enterprise value at 6.3 billion. So it's a little bit hard for me to judge the valuation, appropriate valuation. And this is again coming off of the catalyst with the third successful test flight for the company. One look on Fiverr. All right, let's take a look on Fiverr. I think Fiverr was also down quite a bit from the head and shoulders pattern, and we're seeing a bit of a recovery here. And 153 was a support. We're seeing that RSI push up, MACD push up. The next resistance to watch is going to be somewhere around here, close to 195. You'll notice that we got rejected at almost 197 today. Previous support, previous support, previous support, and that right there is going to be the resistance. And we're also going to get the 50 EMA get aligned more with that resistance here as well. So that's the level to watch. It's been on a consistent uptrend, really, really significant rally coming in from the pandemic lows, 1,000% gain here. So this is, in the grand scheme of things, not a big surprise that we're seeing a pullback for Fiverr down about 40%. But nonetheless, I think long term it has a lot of potential with the gig economy and the freelance economy, and how more and more businesses actually move towards hiring people from Fiverr to do or outsource some of the work. You'll look at the revenues, coming in from 2017, consistent uptrend, increasing revenues, having that trajectory to profitability. Just the valuation still a little bit on the higher end. So 30 times sales is nothing small. It's a pretty rich valuation, and price to earnings are also very, very rich. So be mindful that this is more of a longer term play, and if you're buying at these levels, you're still paying a bit of a premium, which I'm personally comfortable with. It's just depends on your personal preference and how you handle risk and what your risk assessment is for different stocks. So companies like, I should say, Square, Shopify, Fiverr, CrowdStrike, Twilio, they kind of fit in the same bucket where they have a lot of long-term potential in the future. They've got great revenues, great balance sheets, but it's just the valuation today does not make sense just yet, in my strong opinion. It could make sense in a few years from now, but it's just based on the price to sales, price to earnings ratios. It's a little bit on the rich side. So, all right, NASDAQ is flat on the day, and the S&P is also it's a little bit red. And let's take a look at some of these stocks here. So NEO up over 1%, Palantir pulling back a little bit under 22, so $22 we got rejected. Nvidia is pulling up, pushing up higher a little bit, I should say. Apple flat on the day. Let's take a look at Amazon. If Amazon has held up any of the gains, flat on the day. So 32.50 is actually the support level for Amazon. We're trading as 32.59 is the low for the day. Look at Workhorse. Workhorse is up over 8%. Li Auto up over 6.5% after the earnings call. We're breaking out over $21 per share for Li Auto. That's incredible. Almost 21.10. So the 50 EMA, that's the level that we are seeing a breakout over. And if you look at some other EV stocks, Workhorse, I think I have a complete analysis of Workhorse on this chart. So I don't have the analysis. Maybe it's just this one. So for Workhorse, incredibly oversold it had become when we sold off all the way down to lows of 750, 742. I think the USPS contract was the big sort of catalyst for the stock, driving it up to new all-time highs of $42, $43. And without that, they have to really kind of push forward with the revenue projections. And I think they also reported their earnings recently, which were Here, let me actually see if I can bring that up. Yeah, so they actually cut their vehicle production guidance as well for 2021 after the first quarter miss on supply chain issues and shipping delays. So those are not great headlines. Again, you want to do some more diligence and kind of dig in deeper to really understand what is actually going on with the company. But on Monday, it cut its production forecast to 1,000 units from 1,800 units after the Q1 output was hit by supply chain issues and posting wider than expected net loss. But nonetheless, I think ARK Invest is also buying more and more Workhorse, or they were. I'm not up to date with their Workhorse position, but resistance is going to stay put at close to this 50 EMA at 1182. And support, is going to be the most recent low set forth at close to $7 per share for Workhorse. All right, let's take a look at this. Let's listen on the tapering talks here very quickly.
Banks are starting to talk about tapering. Canadians said that they're going to start it in the next year. And you've got all these other countries that are saying maybe it's time to start looking at that because the economy in those countries recovering faster than people thought it would from the pandemic. But Richard Clarida, as Alex said, he's not making a strong case for that yet. He is saying that he doesn't think inflation is going to be a lasting phenomenon. He says transitory again. And then he says there will come a time in upcoming meetings where we'll be at the point where we can begin to discuss scaling back the pace of asset purchases. What does that mean? Is that a real hint, or is he just acknowledging reality? Well, so far it looks like the markets are hearing what the Fed wants them to, because you take a look at what's happened with break-evens, and you can see here that the 10-year and 5-year basically over the last couple days have fallen. And that suggests that they believe at the moment, the Fed story, that inflation is not going to be a lasting problem. And so the question is, where do we go from here? The dog that's not barking, the U.S. We're looking at what consumers think. The markets aren't in it. Consumers are basically telling the same story. We look at the white line is the expected higher income. We talked about this the other day with the consumer confidence numbers. People don't think their wages are going to be rising over the next year, even though they think inflation, the blue line, is going to go up in the short run, but in the yellow line, not in the long run. So there's no wage price spiral here, nothing for the Fed to worry about. And the Richard Claritas of the world and the U.S. Fed can continue their QE experiment.
I guess if the Bank of Canada was a dog, it would be either a Newfoundland, maybe a Labrador. Fed, I don't know.
Yeah.
Be interested to see what kind of a dog.
Husky?
Yeah.
German Shepherd?
I think we have a...
All right. So consumer confidence still staying relatively lower when we talk about the wage increases for existing employees. I think the newer ones are still getting huge. McDonald's announced a much higher wage per hour, and so did Amazon, because they're still fighting to get more employees to work as they increase their expansion. But SPY flat, QQQ's also up over 11 basis points. The federal funds rate still down, no surprises there. That's going to be the rate hike there. But NEO up over 1.6%. We got Palantir 2%. Let's take a look at Twitter. It's up over 2%, so breaking out over $57, $58 per share. ARK actually sold some of its Workhorse recently. ARK sold all their Workhorse position. That's good to know. Thanks for bringing that up. Yeah, I was a little confused if they've still been buying or if they are actually selling their Workhorse position or not. All right, let's take a look at here. So all stocks, and we're looking at change. So we've got AMC up almost 13%, and trading past over 1850. So definitely seeing that squeeze happen for AMC. GME is up almost 11%. We got Riot and Mara up almost 9%, 7.5% each. Mara actually put a trade idea over at our Patreon yesterday, where there was an established entry, exit point, profit target, and the risk and reward ratio. So that's going to be included in our Patreon as well moving forward. I'll from time to time put up a technical chart, and I'll put up some trade ideas, whether it be a swing trade or a long-term trade that everyone can take advantage of, considering that you do some more additional research analysis on with and tie it with your own strategies. But I think every week if I see any opportunities, I will post that on there, maybe a couple of times, 3 times, 4 times a week. And those are opportunities that you can take for different stocks. It's going to have a risk score. 1 is going to be very low volatility and low risk, and 3 is going to be high volatility, high risk, and it's going to have different price targets, entry, exit, profit targets as well. But nonetheless, we got Shift Technologies up over 3.5%, almost at $7. This may be an opportunity that we may be missing out on right now. But again, I'll definitely be looking into this after the live stream. And Bionanogenomics up almost 3%. We got Best Buy. C3 AI is also up over 2.5%. Fiverr is up over 2.3%. We got Corsair Gaming's up over 2%. Carnival, United Airlines. Let's see what's red. So Coinbase turned red. We got Bank of America, Wells Fargo, Procter & Gamble, Visa, AT&T, Netflix, AMD. We haven't talked about AMD today. It's pretty much flat, trading at $77.82. So AMD to present at Bank of America 2021 Global Technology Conference. I think there was maybe this conference is in June. Let me see when this conference actually is taking place. I'll go over that in just a second. I don't know why my computer is just freaking out. But Tesla, flat on the day. There's nothing really severely in the red except for this, which is Nordstrom. Nordstrom is down over 8% on the day, trading as low as $33.30. And I think they reported their earnings. So Nordstrom stock drops as earnings fail to keep pace with the sector. So let's break that down very quickly. All right, let's see what they had to report. So Nordstrom stock drops as earnings fail to keep pace with sector. Said it lost $166 million or $1 per share compared with a loss of $3.33 a share in the year earlier period. So year over year, it's still shrinking. The company attributed 41 cents a share of the loss to debt refinancing charges. Revenue rose 44% to $3 billion. Analysts were looking for an EPS of 57 cents and revenue of 2.9 billion. So that's interesting. Revenue beat, but miss on EPS, and not just any miss, it's a huge miss. Wall Street was expecting a profitable quarter. Same store sales climbed 44%, above 41.3% consensus estimate. Digital sales were up 23%. The company said it saw strength in both its flagship and Nordstrom and Nordstrom Rack divisions, while consumers continue to buy more home goods and active wear. So this is another stock that I'll be doing research on. Why? Because I feel like it's incredibly oversold. This is an overreaction from the market for Nordstrom. So JWN. So yeah, I mean, we're seeing a bit of a massive sell-off. Lows of 32.55 is what we traded at. The RSI and MACD again coming down to oversold levels. So this is another stock that I'll be doing some more research after the live stream to see if there are any buying opportunities for this. They still have 6 shares in the ARKX fund. That's interesting. NNDM's running. That is awesome. So this right here was the analysis. Nano Dimensions running up almost 9%. Look at that. We might have a breakout over 750 today. So the volume on the day is 6 million. So we're almost at 50% of the average 10-day volume. So, and it's only not even been an hour. So we're 45 minutes into the trading session and we're almost at 50% of the average 10-day volume. So in my strong opinion, by the end of the day today, at 4 p.m., this volume is going to be much, much higher. Probably even close to 15 or 20 million shares traded. And this is going to confirm a breakout over that 21 EMA, and the next resistance to watch is going to be that 750 levels. And you know, at this pace, would not surprise me if you actually get a breakout over that level too. You know, at 756 for an NNDM. I wonder if there's any catalyst. If there's any, all right. So May 20th, this was actually not even reported today, but Q1 net loss narrows, revenue rises. Net revenues for the quarter was 811,000, up from 702,000. Net loss on Thursday of 5 cents per share compared with the net loss of 32 cents per share. So this was a few days ago. I don't know what's driving the stock higher today. Potential short squeeze? I don't know. Was this stock even shorted all that much? You guys probably have a lot more information than I do on NNDM. But yeah, let us know if you know anything in the live chat about Nano Dimensions and what the catalyst is behind this or driving the price higher. Let me see if I can find that on Webull. So, okay, so 1 day ago, Nano Dimensions launches Dragonfly LDM 2.0 update. So, alright, so Wells Fargo CEO is actually talking right now on Bloomberg. I'll bring that up in just a second. But Nano Dimensions launches Dragonfly LDM 2.0 update. So VP of Product Champion Nir Sadeh, sorry for the mispronunciation there, but he basically says, and I quote, "I'm excited to announce the Dragonfly LDM 2.0 update, which was developed by Nano Dimensions R&D multidisciplinary teams over the last several months. And this great effort resulted in a product that will significantly take us one step closer to fulfilling our vision of additive manufacturing of high PEDs in a cleaner, smarter, faster way." So this free update to our existing Dragonfly system owners is expected to contribute to increased customer satisfaction while demonstrating to potentially new customers our commitment. So I think that was one of the biggest catalysts that we're seeing, a push higher for NNDM at just over $7 and up just almost 9% for the stock. We actually covered XL Fleet earlier, so you guys are more than welcome to check that out. We went over some of the support resistance levels, and I need to do some more fundamental analysis of 3 stocks. I'm actually doing some for Trade Alert. Which Patreon member should I join? I think it's going to be the investor. So I think it's going to be the investor tier. The first one I think is support, which is going to be private live streams. So private live streams and support are going to be 2 basic ones where you get access to their trading view charts. But for the trade alerts or trade ideas, so to speak, where I will be posting different charts and analysis on different stocks, that's going to be the third one, like the investor tier and higher. Just got 100 shares. Let's see what happens. 100 shares of Jason NNDM, or what is it? So SOS also taking off. Let's take a look. So SOS up over 6%. We're still off the highs quite a bit, no doubt. We were trading as high as $15, but the 21 EMA, 50 EMA, those are the most important moving averages. For any stock, I mean, from any technical standpoint, the moving averages are important. The support resistance levels for basic supply demand are also very, very important, I should say, for these stocks as well. All right, so that's good. IDEX, let's take a look at Ideanomics. And we're almost seeing that breakout over the moving averages, right? Up almost 3.8%. So we're seeing a lot of push higher for some of these stocks, right? I mean, nothing is in the red for these stocks. This is a subscriber special video that I did quite a while ago. And Beam, look at up almost 11%. NNDM up over 8.44. Workhorse, Nordstrom Motors, Fubo TV is up over 6%. And we're seeing a breakout over that bullish flag that we talked about in our previous live streams. So, prior run up, we saw that bull flag forming, and we're seeing that breakout happen. The resistance to watch for Fubo is going to be that 50 EMA sitting roughly at 22.75. And if you can get a successful breakout over that level, then we are off to the rails, right? We are off to potentially see some more continuation. Be mindful though that the RSI is at 58. Not quite overbought just yet. We still have a little bit more room to the upside. So the RSI pushes higher. We fill in this gap here. That's going to potentially lead to a breakout. Keep a close eye on the volume. We're at 3.7 million, so not very high volume on the day compared to what NNDM is seeing. We're almost at 50% for Nano Dimensions, but so yeah, lots of volume, a day trader's dream. I agree. For a lot of those stocks, there's a lot of volume, right? NNDM, Beam Global, let's take a look here. So for Beam Global, we actually saw a breakdown from this descending triangle, and now we're coming back up to potentially retest these lower highs. So I would watch this very closely. It's going to be sitting roughly at $28. The high for the day, we're literally trading at high of day at $27.95. And the RSI is coming from an oversold level as well. If you can check shop, it looked bearish, could go back 200. So Shopify was hitting a resistance, right? So this right here is the complete breakdown for Shopify. It was hitting a resistance for us yesterday at 1290. This has been kind of like a range bound pattern for Shopify for so long. This is coming from June and July of 2020. And you'll notice that we have just been trading sideways. We've just been going back and forth. Became overbought here, came back down, became oversold here, came back up, overbought, oversold, overbought. And right now, we have pushed up quite a bit. And the RSI is trading at 60 and the MACD is also pushed up. So a breakout could happen, but I think the NASDAQ would really need to push up close to 4 or 5%, in a few weeks' time for us to see a successful breakout over 1290 for Shopify. And we've moved up 25% since May 13, so in just less than 2 weeks, we've pushed up over 27% for Shopify. So 1288, 1290 is the resistance. 1200 is a support level to watch. Ali, we checked Lee several times. We've broken that down, so you're more than welcome to kind of go back on the live stream and watch that and kind of circle back. But let's take a look at MP Materials. So MP Materials was also one of the stocks that we were covering previously, and we actually broke down below the support here, coming back up to retest that as a resistance. So I'll actually go ahead and turn this level into a resistance for MP Materials. We're up over 4%. The volume, 636,000 on a 2.8 million average 10-day volume, but $27, $27.50 I should say. So that right there is going to be the level right here as a resistance to watch, because we are getting rejected at this previous support, right? So this support once, twice, 3 times, 4 times since we saw a breakdown, back tested resistance, and we're also trading below the moving averages. So that right there is going to be the level to watch for MP Materials. But Skills is up over 3.3%. We're seeing a potential. We'll see if you actually break out into this uptrending channel, higher highs, higher lows, because we were forming this downtrending channel for quite some time. So this right here was a sell-off of over 72%. We saw the spike getting rejected at the 50 EMA, sold off even further. Potentially see some recovery here. All right, so Snowflake is also releasing their earnings today. Let's take a look at Snowflake here. So Snowflake has a resistance at 241. We're seeing kind of like a curling in. Let's see if there's any estimates. Krish, GME going to the moon. Yes, GME and AMC, they're both up on the day. Definitely pushing higher. So let's see if we can actually find something here. So this is from back in March. So Snowflake May weekly 2030 straddles, that's options. All right, tech stocks narrowly lower this afternoon. So not really sure what the earnings estimates are. EPS is expected according to TradingView at negative 16 cents per share, but I also don't trust TradingView with the fundamentals of some of the companies because they have been wrong in the past. But nonetheless, we're seeing a bit of a recovery here in the SPY and the QQQs. And this right here is going to be the quick breakdown. So NEO, look at Twitter, up almost 2.48%. Let's take a look at Palantir. Up a little bit over 2% here. Amazon still over 3260 levels. NEO, it's up over 2.3%. We're seeing that push higher. And we tested as a 37.10, and we're now back under that level, trading at 36.91. Akash, we covered NVIDIA as well. I think NVIDIA is pulling back on the day. Or now it's surging back in the green prior to the earnings. How I feel about Skills, it's a great question. Fundamentally, I think I have done some research. It has a lot of potential in the future, I feel like. But it's just the valuation, I think, needs to get more aligned with the revenues that they're generating, which right now, at close to 83 million, 84 million, and the market cap sitting at just over 6.5 billion is a little bit rich in my view. 38 times sales, price of sales 38 times is nothing small. It's a little bit over the mean, I should say, over the average. S&P 500 trades at 2 or 3 times sales. And again, this is a growth company. It deserves a higher multiple, but this is still pretty rich. I mean, Apple trades at 7 times sales, Amazon, and a lot of growth companies like Square, for example, right? Let's go over to Square very quickly. So Square trades at 8 times sales, right? 296 times price earnings. So price to sales is a little bit higher for scales, and for some of those companies. So two things need to actually happen. One, either revenues need to really move up to kind of align with the valuation, the current valuation, or the price needs to move down to get more aligned with the valuation. So either of those things happen, that's when a deal becomes more and more attractive, and more and more upside potential increases, right? There's more margin for reward in the future. But nonetheless, this right here is going to be Square's technical breakdown. Actually, it should be on here. And again, we're getting a breakout over 220, and this has been the pattern for Square for so long. $200 support tested, back up to 285, come back down to 200, push up to 250, come back down to 200, push up to 276, and it's just been back and forth for Square as well, right? It's just been traded in that range. So Tesla is pumping. Let's take a look. Oh, look at that. Tesla up over 0.5%. Back up over $608. We are certainly seeing a lot of volume here kick in. This is a bold green candle on the 5 minutes from Tesla. This is high of day is going to be 608.96. And look at NIO. Up almost 3% here. Palantir up over 2.65. Nvidia up 21 basis points. It's almost as if you can feel that the bulls are stepping in more aggressively than we have seen in previous times. Like when we see the buyers step in, usually it feels like a very weaker breath, lower volume. You can almost tell that it's a false breakout or a bull trap. But right now, if the volume continues higher, we're still seeing volumes peak up a little bit. And look at Palantir, out of nowhere, up over 3%, breaking out over $22. NIO up almost 3%. NIO break that 30 and 50 resistance. Tell me about it. Like this is a resistance that we need to see a breakout over for NIO. Palantir needs to see a breakout over 22.35. We're almost there. But look at that 5-minute candle and the volume spike that we're seeing for Tesla. I mean, this is much higher volume than we have seen since the open. So during the 5-minute time frame, 456,000 shares traded, and now we're seeing 388,000 shares traded. There has to be some catalyst for the markets to push up. Like, this is not, Harry, what's up? I think it's you. As soon as you came on board, Tesla is skyrocketing. Look at that. Look at this candle. And this is, I'm not making this up. You came on board. This is the 5-minute candle. And we're up, within this candle, up over 72 basis points. But NIO is, let's take a look. So NIO is up over 3%, and let me see if actually this is translating over to Amazon or Apple. So Apple is also seeing a bit of a recovery here, and this is the Nasdaq and the S&P. Not so much in the Nasdaq or the S&P. You'll notice that we're still not quite at high days. We're still, pretty much tapped out for QQQs at 335. CNBC this morning is shifting the narrative. It is time for tech. Yes, it's about time. It is about time. So if you look at this chart, actually I'm going to remove some of these. So I'll actually delete this one, and I'll remove this one too. So this right here is another chart that we broke down previously, right? So it's a relative performance chart. Is it me or is it lagging? It could be lagging. I do apologize. I think it's probably the internet. It could be lagging for you guys. I think it's on my end. Yeah, we're seeing that lag for some reason. Is it better? Is it much better, or is it still lagging right now? Should be a lot better now. It's still lagging. Lag. Yeah, I don't know why. I think it's the internet. I do apologize, you guys. It's the internet. Fine now. Okay, that's good. Yeah, I just closed with Bloomberg because it was just drawing some data. But nonetheless, this is kind of like QQQ is divided by SPY. And I know we all want to watch Tesla go up to over 610, 620. NIO is also pushing higher. Palantir is pushing higher. And what other stock can we add on the list here? Let's see. So let's add. Ooh, look at GME and AMC. They're up 14, 15%. Just literally, AMC is literally just going to the moon now. It's just been pushing higher. And it's almost at 20 bucks. That was kind of like the previous high that was set. All right, so let's put up here. Let's put up Square. So 2.5%. But this right here is the relative performance chart. This is something that we broke down previously as well on the channel. And one of the observations that we were able to make on this is that if you were to kind of bring us back, we've seen these times where the NASDAQ underperforms the S&P 500. So this is, in a nutshell, this chart shows that every time this is going up, that means NASDAQ is outperforming the S&P. Every time this chart goes down, the S&P outperforms the NASDAQ. Now, outperformance doesn't always mean that S&P is going higher, much higher than the NASDAQ, but it could also mean that it's going lower than the NASDAQ. So if the NASDAQ goes down, like let's say 12%, the S&P only goes down 6%. That's outperformance as well, as opposed to only looking at the upside where the NASDAQ goes up 5% and the S&P goes up 10%. That's also an outperformance. So it works both ways when we look at underperformance and outperformance. So when this chart goes up, NASDAQ outperforms. When this chart goes down, we see underperformance. And we saw, every time when we have seen some type of a negative divergence, like a bearish divergence where this chart goes up, or this index that we've created, we've seen negative divergence and then a sell-off, meaning S&P outperformed here during this time frame, and this is in September 2012 till April 2013. So we're talking about September, October, November, December till April, 4 months plus 4, 8 months worth of underperformance here for the NASDAQ. And people, again, during this time were saying tech is dead. There's no future for tech. Value is going to be all the returns where the value is going to be, and you don't want to buy tech right now. And if you had bought tech in 2013, you would have done really, really well. Very same situation, underperformance for the QQQs or the negative divergence here, and then underperformance here. And this is back in December 2015 going into June of 2016, another 6-month period. Same thing happened here. Negative divergence for the NASDAQ, for the RSI. We see some underperformance coming into November of 2018 and December 2018, starting in July of 2018. So we see another 4 or 5 months. And then, of course, a huge push higher, another negative divergence, bearish divergence there, huge divergence, right? The RSI continues to make lower highs, and we're seeing mild outperformance from the NASDAQ. But this right here, since the beginning of February, and even further back, I should say, like in June and July, we've just seen the NASDAQ underperform the S&P. Now, does this mean that tech is once again dead or there's no future? I don't think so. I think it's the time to actually be buying and accumulating more for the next leg up higher than we see the NASDAQ outperform the S&P once again. So I think this is a very, very simple chart. And if you do the complete opposite, if you actually come up to SPY divided by QQQs, it'll show you that this has been a downtrending chart, meaning this is the exact opposite of what we just looked at, meaning that SPY historically, time and time again, over the last however long this chart goes to, so we're going back till 1999s, has historically underperformed the NASDAQ. And it has had these spikes where it pushes up, has these stages where it outperforms the NASDAQ, but eventually kind of reverts back, right? So look at the RSI. It's not overbought yet, but once we get there, we could see a rotation back over to those levels. All right, so look at Tesla, 1.4%. We got NIO up over 2.68%. We got Palantir up almost 3% here, and we got Square running past over 2.6%. And let's take a look at Enphase, up almost 2% here. DraftKings up almost 3%. So yeah, across the board, we're seeing a lot of buying pressure and green. So NASDAQ up over 30 basis points relative to S&P, up over 12 basis points. So that is outperformance from the NASDAQ. And that's exactly what I'm talking about on this chart. What do you guys think? I want to know from you guys as well. Let me know in the live chat. We have 250 people watching. What do you guys think about this chart? Are we going to see more persistent underperformance from the NASDAQ a little bit longer? Or if this is going to be start of some outperformance from the NASDAQ once again? And again, I would not be, in fact, I would be happier if the NASDAQ continues to underperform the NASDAQ. If you do see some more weakness, right? Gives us more opportunity to accumulate more and buy more shares according to this chart. Because historically, time and time again, this has been beware of the bull trap. So, all right, Shop is in a bull trap right now. For tomorrow, I predict a retest of 1198. So yeah, Shopify is already hitting some type of resistance at 1290. And again, this right here was a chart that we talked about at 1290 levels. So it's already hitting some type of resistance potentially. So it wouldn't be surprising if you do get a retest of 1200. Let's take a look at Alibaba. And we're still hovering over $210, $211, up over 68 basis points. There's really not much movement or volume in Alibaba just yet. So this is a stock that, very undervalued. Core business remains strong, but we have to be very patient with the upward momentum or the upside with this stock, right? It's just been on a downtrend since the beginning of October, and we've just been coming down. Jack Ma went missing. We had the scrutiny, the fines, a lot of different things that are hurting the core business, but still very undervalued in my opinion. Easily over $300 per share stock, but technically it's just been a lot of weakness. Once the antitrust investigations are over, we will see a rotation. So that's actually a great point. But NEO is up over 2.3%, just trading shy of $37 once again. But we're seeing a bit of a heavy pullback here for NEO, and Tesla on the move, up over 1.3% as well. All right, so some more stocks we're going to quickly break down, and then we'll call it. So this chart of QQQ and SPY is what we need. So yeah, I mean, this is a good representation of relative performance, right? It's a good representation of how the NASDAQ is done relative to the S&P 500. So it's a good comparison of growth versus tech. And you can build out all these different charts. Like if you, let's see if I can build this out. Again, this is on the fly. Let's look at Facebook, Apple, Amazon, and we'll cover Netflix. We'll cover Google, cover Tesla, and we'll cover Nvidia, and we'll divide that by the SPY, right? Let's see if it actually works. I don't know if it will. All right, so we just built another index, right? We built out an index where it's trading at 18.85, which takes into account FANG plus Tesla and Nvidia, and this thing is up over 30 basis points. Let's take a look at it historically. And again, if this line is going up, meaning that these stocks are outperforming the S&P 500, and this is coming from 2014. And it's no surprises that we're seeing a lot of underperformance here. So these stocks collectively were just going down relative to the S&P. So during this time frame, you would have been better off investing in the S&P 500 than investing in these FANG names or Tesla or Nvidia, so to speak. But then, huge spike, right? Another huge leg up higher. Underperformance. So let me point that out. So right here, underperformance here. We see a little bit of underperformance, and then we push up higher even further. And then 2018 comes around, a lot of underperformance, right? So this is again coming in from August 2018 till like December. And then we had the huge surge during the global pandemic, and now we're just seeing a lot of consolidation sideways. So this index in general has just been trading in between this range. And could be a bull flag, you never know. Like this could be a bit of a rally here prior to the global pandemic. and we're seeing a lot of consolidation here, kind of forming a bull flag, and that could lead to the second leg up higher that we see some more upside here in the future. All right, so again, these charts, super important, interesting data points to look at. So QQQ's up over 30 basis points now, and the S&P up over 14. Let's take a look at Tesla. Every time I reload this is off the charts here. This is off the charts. So I do not think QQQ is ready to take off yet. The story hasn't changed with tax, inflation, and rate increasing looming. I agree. To get some more clarity and more visibility, I think June is going to be a very important month. But you know, the markets are very forward looking. Like, we price in potential fear months in advance that could happen very, very early. So you'll notice, you know, when this happens with a lot of individual stocks and the broader markets as well. So when there were elections back in November, the markets dropped 2 weeks prior to actually the elections happening. Why? Because there was a lack of visibility and unclarity about the markets. But once we had the results come out, everything rallied back, right? Everything was normal and the markets had reduced volatility. Right now, once we have that data points come out specifically from inflation and the FOMC meeting about tapering and interest rates, that's going to provide more visibility and more clarity to the markets. And once we have that, then I see the markets ripping higher, like more specifically tech and growth having a boom towards the second half of the year. Like, once people find out that inflation potentially will be transitory, again, there's no certainty of that, but in my opinion, there's a high chance, a high likelihood that we see inflation creep up and then we see it kind of come back down going into the second half, going into the fall, winter, and then next year. Because you can't have commodity prices, lumber prices keep going up at these rates. This is not sustainable, right? It has to level off, and especially when you're looking at base effects, when you drop off April, May 2020 figures and you take into account newer numbers, it's going to level off. And once the market finds that out, that's when I see a boom in tech and growth stocks in the second half of the year, right? Starting July, August, September, October, going into like the next year, 2022. So that's kind of like my bigger macro picture, like on the backdrop, is what I'm expecting from the markets. And right now I'm seeing these times of volatility as time to accumulate more. I'm a net buyer right now at these levels. I don't even remember the last time I actually sold a stock. It's been a long time. It's been a really long time. But that being said, Tesla definitely ripping up over 1.6% here. NIO's higher. And yeah, so the put call ratio, that's a good point. I'll cover that in one of my next videos for sure. All right, what about the VIX? That's a great question. So the VIX is actually coming down below 20 levels. You know, we're trading at 18.33. We're down about 2%. And this right here are two levels that I've mentioned at 24.5, 30 levels, you know, potentially if you get a retest. I personally don't see a retest of 40 levels, let alone levels of, you know, 80, 85 that we saw, you know, because of the global pandemic. I think this was the most we have ever seen from the VIX. The last time we saw the volatility spike this much was back in 07, 08 during the housing bubble, when it spiked all the way to highs of 96. And this right here was a spike of as high as 85. So even the dot-com bubble, like if you look at the 1999s and 2000s, 1998, this right here, 2002. So this entire period, we got tapped out at 45. So we got tapped out during that same time at this level, at close to 45 levels. We didn't even quite retest highs of 85 or 90, that like we did in the housing bubble and the global pandemic. yeah. Kramer just said, you know, we should buy Tesla and sell NIO. That was pretty interesting because I'm bullish on both. But Tesla definitely having that move higher. I wonder if there's a catalyst. Let me see if I can find something on Webull. Because they've had to had, or this may not be on a catalyst either, but so these are the Cathie Wood stocks Wall Street believes have the best chance of roaring back. So not a chance Tesla will dominate car industry in 20 years. That's interesting. Let's listen on this or read on this. I actually like reading more bearish stuff on stocks than bullish stuff because it gives us a good balanced overview, and kind of points out if there's anything that we could potentially be missing. So Tesla short sellers are up 4 billion so far this year. That right there in itself is a bit of a kind of like a recovery, so to speak. Like 2020 was absolutely brutal for short sellers. Like they lost so much money, especially in Tesla. So this I think is like a consolation, so to speak, 4 billion. Driven by the stock's fall back to earth after a steep rise from more than 695%. So Michael Burry, we have also talked about this. Another legendary investor now, Columbia University professor Emeritus Bruce Greenwald, whom the New York Times once called a guru on Wall Street's gurus, says he doesn't think Tesla can live up to its astronomical market cap, but Greenwald acknowledged he wouldn't short Tesla because many have gotten slaughtered doing it. So he says, quote unquote, slaughtered doing it. So 20 years from now, you really think that they're going to dominate the auto market? Greenwald tells Yahoo Finance editor-in-chief, and the answer is not a chance. Yeah, because they're not going to dominate the auto market. They're going to dominate robo-taxis, electric vehicles. They're going to dominate more industries, in my opinion, than just the auto market. But that's pretty interesting. Not a chance. We know what a competitive auto market looks like, he adds, because in the market, most of the big companies have flirted with bankruptcy at one time or another. So for nearly 3 decades, Greenwald taught a popular course at Columbia University on value investing, which identifies stocks at trading price lower than their book value. So that makes sense, right? That makes a lot of sense why not comfortable putting family fortune in Tesla, because value investing, of course, takes into account a very traditional approach to valuing companies. When you look at, the underlying discounted cash flows, weighted average cost of capital, trying to find the intrinsic value, there's nothing wrong with that. In fact, value investing has actually done very well for a lot of folks, but it just doesn't apply, in my opinion, to a company like Tesla, which is very, very growth oriented. You can still apply value metrics to it, but it won't make any sense, right? Like if you were to apply very similar trajectories for AMD or for Tesla, you're going to get some ridiculous price targets that are way, way below like the actual, where it's trading at. So that's kind of like a big sort of, I should say, like debate between value investing and growth investing. They both work in their own respective ways, but it's just different valuation metrics that you're using against different companies. Because Tesla, I feel like anyone could have made a strong case back in 2020 for Tesla when it was under $300 or $400 per share, and it was at $50 billion market cap or $60 billion market cap, and it was pre-split. This is pre-split, 60 billion, 70 billion. Anyone could have made a case that based on my value analysis, intrinsic value, Tesla should not be at this level. It's very overvalued. And yet here we are 10 times that level at well over $592 billion market cap. So there's just 2 schools of thought, in my opinion. So gold, where do you see that going? That's an interesting question. So gold's back up over 1,900 ounce. It's up over 20 basis points. I think this has been tried and tested hedge against inflation. Gold has been tried and tested throughout decades, where people have actually plowed money into gold when they've seen any inflation coming. I think that's why we're seeing a bit of a push higher for gold. So you'll notice that we are coming from lows of 1775, even lows of 1675. It pushed up 13% in anticipation of potential inflation in the United States. So I see more upside for gold. I see it breaking out over $2,000 an ounce, potentially even higher. But then once inflation kind of levels off, then we'll really have to see where gold trades. But historically, I think it's always done really well. It's just, I think, relative returns. Again, comes back to whether the opportunity cost of you investing in gold is there versus something that's generating more cash flows and is more growth oriented in the future, right? Like Tesla or something else. So great inflation hedge, in my opinion. It's moved up quite a bit in anticipation of inflation coming, but it's just opportunity cost and relative returns that you have to kind of understand with gold moving forward. So NEO, up over 2.8%. Analysts have said that it could cost $20 billion to build electric ports across America. Yes, so infrastructure is going to be huge for Tesla in a lot of countries, I should say, because if you look at India, and this is something that we have covered in our previous videos, cool, I'll cover CRM just a second. I think infrastructure is going to be the bigger challenge for Tesla in India. It's not so much of an adoption for electric vehicles, but it's more so how we get those charging stations built. How do we get robo-taxi infrastructure built around the traffic control that we need here in India, because things are very, very, very sort of, I should say, outdated, right? So we're not quite up to speed with the technological advancements when it comes to the adoption of proper electrification, EVs, charging stations, so on and so forth. So I think that's going to be the bigger tell for Tesla in India. So this right here is the complete technical breakdown for CRM Salesforce. Lower highs, lower lows. We've been kind of range bound for quite some time. We saw a push higher after $203 validation for Salesforce. We pushed up, 15%. We're testing these lower highs now. A breakout could be at play, right? The RSI, MACD, definitely pushing higher here. The earnings are actually coming up on June 1st. Let's see if we can actually break that down. So there's nothing yet on here, but I'll definitely probably do a video on them very soon, because June 1st is also going to be after the weekend, so it's going to be next Tuesday. So I'll do a little bit of a video on them as well, on Salesforce ahead of the earnings. But that right there is going to be the resistance lower high at 230 and support at 203. There we go. So NIO's up over 3%, breaking out over 37.20. Palantir is up over 3%. 22.30 is a level. Look at the high for the day, $22.24, right? So we're just shy of $22.30. And we've got Tesla up over 1.7%, and we've got, let's take a look at Apple. We're also pretty much flat on the day. All right, guys, so I'm actually going to end the live stream here. It's been almost 2 hours. Thank you so much for joining in. I really, really appreciate you guys. We covered a lot of different stocks. We covered probably all the ones that I saw that came through from the live chat. If I did miss you, I do apologize. We'll definitely get you the next time. And again, whoa. Hold on, what happened there? So that was a big order that went through at 604. That was strange. Huge wick for Tesla. All right, nonetheless, we're still up 1.87%. And the broader markets, QQQ is pushing higher, up over 38 basis points, and SPY is almost up 14 basis points. But thank you so much. I do apologize. I gotta run, and I'll definitely do this tomorrow as well. And we've got a private live stream over the weekend. If you guys want to get access to that, of course, the Patreon link is going to be down in the description below. And again, trade ideas, newer trade ideas will be posted. We posted a trade idea on Mara. And we did take a position on this, and let's take a look. So Marathon Capital, we are up a little bit over 11.8% today. My price target on Mara in the short term is at $27. We'll see if that level gets hit, but then we'll see a breakout over that level as well eventually. But thank you so much for joining in. I really appreciate you guys. Again, all the links are going to be down in the description below if you want to get access to the Webull. Get 2 free stocks worth up to $18.50. Free money. All you have to do is sign up, deposit $100, and of course, Patreon link is also going to be down in the description below. Make sure that you guys drop that like button. Really helps out the channel in a tremendous way. Thank you so much for your guys' time. I really, really appreciate each and every one of you guys' support. As always, happy investing. Hope you guys have a great day. I'll see you guys in the next live stream.